Alright, hello guys, and glad to have you on board again today. Right before the FOMC, and we're going to record this one on Tuesday, just because I fear I'm not going to be enough time available tomorrow to record, so I'll do this one day before. So, of course, TLDR big warning, we're going to get the FOMC meeting by tomorrow, so expect some volatility. That being said, you also know that, well, external catalysts and stuff like that is none of your concern. When you do trade on flows, you should get away from all of these external information. Be aware of the fact that they can impact the prices, but you shouldn't be paying too much attention to this, okay? So stay focused on a simple set of rules. That's what we do on those intraday strategies, okay? Be aware that the time frame you do trade on will shift over time. It's not just like I would like to trade 15-minute charts and that's it. It's not really the way it goes. The market tells the story, you get to read it, and certainly not the other way around. Don't ever forget that. Okay, that being said, the structure we're in is exactly the same as we were last week. Actually, the prices feel pretty damn similar as well. The strategy in here remains the same. Remember, we have two parallel strategy, depending on whichever side you want to favor, or you could actually trade both, like we stated. That's exactly what I'm going to be doing. On the bearish perspective, we've gone through a weekly resistant context, which is the equivalent of a third range boundary. So we could definitely trade bearish flows on the 4-hour time frame, on the H1 time frame. I'm just looking at it from the higher distance in here, and therefore I'm looking at the Bollinger Band on the trend channel side, okay? So remember in here, we've got the first flow in here, bearish, okay? Then we were waiting for a third range boundary that was right here, and therefore we were trading either the moving average or the Bollinger Band, and as you can see, the moving average has been broken, the Bollinger Band barely tested. So you know that if we go to the Bollinger Band, well, that's definitely a bearish entry point for those who haven't been trading this area earlier. So that's really like, I definitely think that if the prices go up, they will face significant resistance in the nearby 4600, okay? On the other hand, we've also assessed another strategy on the bull's end of the stick, which to me is the one that, if you don't know which one to choose for, rather like to go with the low risk strategy. And the low risk strategy is the longer term trends that are far above the monthly chart. I mean, the primary trend is like a secular bullish trend on the 3-month time frame or so. But still, that also means you can trade both, no matter with that. It's just, well, I personally, generally, when there's a 50-50 chance or two scenarios in the same time, which I can't differentiate, I trade both of them, but I generally tend to weight the position differently. I try to underweight the position that is against the secular primary trend. The primary trend being bullish, that means I'm able to both buy and sell, but I will sell with a lesser position sizes than the buy calls. Okay, that's purely the way it goes. And on that front, well, it was stated that we've a long time ago, it was like last October or so, we found ourselves a big long-term bottom, which followed by a set of sequencer flows in which we should be in the third stage. So in the third stage, remember, we buy the lower Bollinger Band after we've triggered the third range boundary. The third range boundary has been so much winded down to the point that we're just doing it now. So now we have the third range boundary on the H1 time frame, by the way. Okay, the range is extremely mature. We're ready to buy the lower Bollinger Band. So as we stated, we've got a bearish opportunity in here and we've got a bullish opportunity on the lower Bollinger Band. Both of them are actually contracting now. So it tells me definitely that I don't know what the heck is going to be said at the FOMC meeting, but I definitely think that the highest probability outcome is that we're going to hit both boundaries, the top one, the bottom one, and we could very likely still be there 2 weeks away from now. So that's the reason why I'm not paying too much attention to this FOMC, among other things. But that's really the way it goes. And there, well, like I said, I don't really pay too much attention. The price can go lower first and then back to mean, or the price can go lower and then straight up and then be just back there, and could do exactly the mirror version of it, going higher and then lower and then back to middle. Or we could, of course, go higher afterwards, meaning that we go in the sell area and we immediately go for the stop losses of the bears. Okay, that could be one way to extend volatility. The other way is obviously viable as well, which means we go to the buy area and we immediately go for the stop losses of the bulls. That's something that could work out as well. So frankly, to be honest, this is really the reason why I'm not paying too much attention. I think, well, the contracting volatility boundaries means probably the market doesn't expect that much out of this. But if for whatever reason something really big comes out of it, then, well, probably one of the two traders is going to be taken off. That means, well, there is a high probability of stop loss for these trades, and you're going to be aware of this. Does that mean you need to stay away and do nothing? I don't think that's the case. I think both the bulls and the bears can profit from this volatility, so long as, of course, you're weighting the risks. That's the way it goes. So that's my hunch for the S&P 500 ahead of this FOMC meeting. On the other hand, if we have a look at crypto, so many people are just making these correlation bets that, well, if the stock market does this, crypto will do that. Well, like I said, I don't nearly buy that shit for multiple reasons. The first one being that they do not have the same time frame for my actual flow sequences, okay? The flow sequences on cryptocurrencies, at least the big ones, the headliners, the Bitcoin, Ethereums, they do not have flows on the same time frame. Their flow is actually one step higher, which has always led me to believe that there's no such a thing as a correlation between those stocks and cryptos, because, I mean, just not the same time frame, so there might be temporary correlation, but they're very less likely going to last. Anyway, that's not something you should pay too much attention to. Remember, when you do short-term trading, you do really want to forget about all these macro fundamental stuff shit. You want to get focused on the sequence itself. How far away in the sequence and just how dumb should I trade with it. So with this pattern, we should be at flow 3 sequence, which means if the flow keeps going higher, there is a third and final flow though. That means the market will have to digest after this flow. But that's all we know. We also know the stop can be there and nowhere lower than that. So that's the maximum area that the bulls have to defend. And of course, that's the area in which the bears would like to go. On the other hand, we also know that the bears will lose this party if we go above the second flow high point, which means, of course, the bears will have to trigger some stop losses if we go down to 31K again. And we're kind of sitting right in the middle. We know that the third range, the third flow strategy is bought out of the Bollinger Band. So that's where personally I've bought. Right before that, we've had a volatility alert, not the one that says volatility is increasing, but the one that says volatility is seriously being destroyed. So that's really the sign that the market makers are playing around the clock. That's where the way goes. So we've got everything in here telling us, be real patient. The market makers are playing the clock. So don't be among those who want the gains to be delivered quickly and so on, okay? Just be patient, buy the goddamn Bollinger Band, you know where your maximum stop loss is, you know what your targets are. Same story, remember, you don't know what the target is, you can't figure out where a flow is going to terminate. There's only one rule that you know, is that generally flows tend to do at least a 1-to-1 ratio. That means the consolidation that has been made between the two flows is generally doubled up afterwards, for upflows of course, and double down for the downflows. So in here what we know is that the consolidation has retraced that much, so if we go for a third flow, we could expect minimum targets to stand at 38.5K. That's really the way it goes for me for Bitcoin. Same thing can be said for Ethereum. We're going to quickly pass over this one, because I think this week what matters to me is just, well, this one's the strategy is pretty clear. We're fairly liquid assets, and I doubt they will find some enormous volatility or stuff like that. When on the other hand, I see just this all over the social media saying, yeah, things are going to explode or this or that. We're going to go burst up or burst down. Everything suggests the opposite. What I have in front of me says, okay, they are actually playing against volatility, and therefore I should be patient, okay? Instead of getting more aggressive, putting tight stop losses and the like, I just like to say, okay, patience, play around the clock. Just don't try to take too outrageous levels of margin, which will cost you a lot, and that's just the only lesson to take. The time will be a variable in this equation, and you rather like to be among the patient folks, not the others, okay? That's it. And for the rest, and that's really what I'm going to be covering today. Well, that means, well, what happens with all these altcoins? And so are just going to die because Ethereum and Bitcoin might be playing around the clock? No, they are not at all. Actually, truth is that this is definitely a hell of a roller coaster now for altcoins. There's some pumping, some making new lows. It's really, really a roller coaster share out there. So it's hard to figure out for people who once again try to think it as a whole. Like we've always said, there are shit coins out there are quality coins, and there will probably have to be a differentiation. So how the heck can you tell which ones to trade and which ones not to trade? Well, once again, have a fucking rule set. And you can apply the flow trading in here, and you would say, okay, I'm going to get the hell out of all these noise of whichever token is useful or useless, which one is a good or bad token. I'm just going to rely on a simple fucking set of rules, the flow trading strategy. And I'm going to be like, okay, you know what? All of the altcoins may be in the same path. It's probably the same time frames as the big names, so we know the flows are likely in the 4-hour chart time frame, and we're going to study them one by one. Out of this, well, personally, I've always recommended to look at the actual market cap tokens themselves instead of the USD version, due to the very high and destructive inflation that was happening last year with the vesting schedules and stuff like that all over the place that everybody was fucking ignoring. I mean, some tokens have gone through the roof in terms of actual valuations. So like I said, look at the goddamn market caps instead. That's what I do personally. Of course, I mean, you could disagree with that, and in that sense, you would study the USD charts. But let's take a quick example out there, okay? Just pure and simply take the assets you want. My humble opinion is you need to set a boundary to this. Just how far down the line are you willing to go? Do you really want to go chasing tokens that are 150 in a market cap or whatever? It's up to you, okay? They'll define a boundary, and out of this, well, just take on all these assets one by one, okay? And just try to take those that have an underlying structure. Like, for example, can make it very simple. For example, AVE, okay, this is one that I could trade on. There is a flow sequence in here. You can see the damn bottom in here, okay? This one's bottom in June 2022 and hasn't made any new lows since then. So here's how it goes, okay? We go into the daily chart, so we have a bigger picture of this thing. And then 4-hour, which is where the flow sequence happened. The first thing we want is to see a first bullish reaction. This is the big long-term support, okay? Though, let me just gather up the chart. All right, here we go. So remember, low risk area, at least 3 time frames above, and then I can start working on the flow sequence. I'm going to wait for the moving average and to set above. Okay, so context needs to be outside the moving average, and the moving average should at least be flat or rising, but can't be a falling knife like that. Okay, so like examples in here, that's not a first flow. Okay, the moving average is just still exploding to the end. That's really, oh, sorry, wrong button. I don't know, this one's maybe shitty out there, but anyway, okay, let's keep it going. So this one doesn't work. Okay, the moving average is still falling. In here, yeah, it could be flattening, but not enough for the context to go above it. Here we would say, yeah, eventually so, but this is still, I mean, personally, I think in here, this is really shaded gray territory. It's up to you to decide whether or not you think this was enough to be considered the first flow. If you think that is, well, you had to wait for a third range boundary, which means you would have had a delayed third range boundary somewhere in here, breaking the context, making new lows, means the only area which you could have bought is in here. Okay, you would have bought the lower Bollinger Band, and you would be putting a stop loss below those lows. And goddamn, oh, you would have been gone real close to a stop. You still haven't been stopped for now, okay? And that's the way it goes. You still haven't broken the previous high, so until these two, until one of these two gets broken, well, there's nothing for you to say. You would have bought this area, and you're kindly waiting for one of these two to be broken. If it goes above $1.3 billion, then that means you can put your stop at break even, okay? And let it ride. Okay, that's the way it goes, and you would have a second flow riding to the upside. On the other hand, well, if it goes new lows, well, you take a stop loss and you wait for another flow sequence to eventually stop. That's really the way it goes. It's not, don't make it overcomplicated. Taking AVAX, for example, AVAX is making new lows, so if there was ever a trading strategy beforehand, that means this one has been taken stopped. And that also means, well, now you need to wait for a first sequence to start itself. It's just pure simple. Take it for Solana, well, same story in here. Just study what you have in front of you. Okay, this probably should be the big long-term bottom. All right, that's it. So we wait for a first flow. We've got nothing. And here we could say, okay, we've got eventually something. Same story, as you can see, the context is just, I mean, getting closer to, but that's not necessarily a strong context going above the moving average. So you could argue, yeah, not really. So, like I said, in here is a choice mechanism. These ones, they have rules that tend to validate but don't really validate perfectly. So it's up to you to say, okay, I'm not trading this thing, I'm going to go elsewhere. But if you really want to be trading this one, the only way for you to do it was to wait for everything. You've got context to context. This could be the delayed third range boundary. Okay, you need to wait for new lows. So this is where you buy. Okay, you wait for new lows. You got your Bollinger Band. So this is where you buy. And that's it, okay? Pure and simply, this is where you could have bought the Solana the Solana asset, that's what it is, okay? A delayed third range boundary has to make new lows, so you knew you had to buy below this price. This is exactly what you do. You have the Bollinger Band at that time, stop is at the bottom, and you need to break this level to succeed. This level has been broken, which means this trade now is at break even. So if Solana goes back at low, all the bulls are going to take their stop loss. That's really the way it goes, okay? It's really, really that simple. So Solana has triggered the first flow, a very long and painful consolidation, triggered the second flow, which was still in. As you would see, the context have been reversed, so here is your taking profit for Solana. You know that Solana is probably going to be bull taking profit somewhere around $11 billion. That's the way it goes. That's really the way it goes. We also know that normally we were supposed to do at least a 1-to-1 ratio out of the long and painful consolidation. So normally Solana was expected to go trade somewhere around 14, and it didn't. So my humble opinion is that therefore there is a significant probability for this third range boundary to squeeze. That means we just get through it just like it was nothing, okay? It's still a possibility in my humble opinion, okay? In that sense, well, that would just be a tricky trap for those who take profits too early. So my hunch is, on this third range boundary, well, if you've taken the risk already, you would just like to take 50% profits off the table and keep 50% open just in case we go making new highs, okay? That's really the way it goes. Either you squeeze that third range boundary and then for the flow is still going on. I mean, the second flow is still pursuing itself and it's going to go higher. Okay, and remember, normally minimum 1-to-1 ratio, so I would say we're probably much going to have to go $14 billion and eventually higher, okay? And then you wait for third range boundary, profit taking, same story, okay? Afterwards, the third flow is the Bollinger Band. So that's the way it goes. You have a goddamn structure to follow. Instead of just trying to guess all the time whatever this asset will do or that, okay? And you can do for every other asset in the list, even those that I haven't even studied myself, which I think are worth doing. I've studied some for the French guys, so I'm going to do some other ones in here for transparency purposes. Let's go Odious. I haven't done this one, for example. I don't know if it's going to be easy to figure out the market cap. No, we don't have market cap for this one. Okay, another one though, Helium, HNT. I think we're going to get for this one, HNT. Damn it, we don't have a market cap for this as well? Okay. Well, we could study without and just have a look at the dollar value, but I don't know how much inflation Helium has. And once again, you're not really looking at the real deal if there was huge inflation. God damn it, which one can we figure out? I think the ones that are higher will be easier to handle. Are they we've done? Yeah, Phantom. Okay, let's go Phantom. FTM. God damn it, tell me you have that one. No. Ah, Jesus. They've got out of all the things. Render. I think we've analyzed this one. Synthetics. Yeah, Synthetics. SNX. This one I haven't. So I really don't know what the heck it looks like. Tell me you have a market cap. Yep. Okay. So let's do the job in here. Same story, we just verify the time frame, but I know this one trades pretty much similar to the others. 4 time frame, 4-hour time frame, and we're gonna have a look at the flow sequence. Oh boy. Okay, give it a second to plot. Okay, here we go. So lower moving average, we don't look at it too much, don't pay too much attention, and here we go. Okay, stabilize the prices, rose above, clearly very good recovery in here. There's not that much hesitation. Okay, we stand far above the rising moving average, pretty damn great. We've got a double top type third range boundary, so buying the moving average. Personally in here, no hesitation, I would have bought in here or eventually at the Bollinger Band as a reinforcement position eventually. Maximum stop loss always at the lows, and that's really the way it goes. So synthetics right now, we would have, personally I would have bought the moving average, I guess, and that's really the way it goes. For those who haven't bought the moving average, there was the opportunity afterwards. As you can see, never broke the highs. There was the opportunity to buy in here at the Bollinger Band, okay? And still the same old thing, and this is pretty much similar prices, by the way. So the bulls have it under control at 500 million. They're waiting. And that's really how it goes. This thing hasn't broken to new highs for now. It needs to do it. And this is where you put your $500 million market cap entry at break even. Let the fucking thing ride. And once again, I mean, just look at it, okay? It's long and painful. It's really long and painful. That means the first flow has done just this. And all this, I mean, like 5 or 6 times the duration of long and painful consolidation. Still, well, during all that period of time, people will say, this thing doesn't go up because it's whatever or that or this or that. Endless, painful kind of thinking. On the other hand, well, clear set of rules, you know what to do. You know this is profitable in the end if you do it multiple times without overthinking things. Just do it and don't make things overcomplicated. Okay? Same story as usual. You want short-term strategies, you just can't pick the time frame you want to trade on. The time frame you can trade on is defined by the market itself. On cryptos, TLDR is this is 4-hour chart time frame. Anything below that time frame, okay, is only volatility. That means uncertainty and professional market maker's job. On the other hand, well, do whatever it is that you want. But to my humble opinion, anybody trading below 4-hour chart time frame now, I don't know what they're doing, but this is not something I'm willing to do on my end. Okay? So like we always said, you can listen to everyone else in the YouTube channels and the like and try to jungle from this strategy and jingle to this one and this one then and change strategies all over the place. Or you rather like to learn one, trade by yourself and try not to be among those who try to be right or wrong. Just understand that there are different maturities on different assets. They all behave significantly different. There's no one fucking crypto market that goes up. And the clear evidence of it is just look at the fucking charts and you'll see that they're all different. So trade what you see. The assets you pick to trade, I don't care. I mean, pick your own favorites. But normally, we should all agree on what's tradable and not. That's really the way it goes. So to me, there are some assets which I'll be willing to trade bullish because they do have a sequence that I know and I'll be willing to follow. And there are assets I don't give a fuck. They're making new lows and I don't know what the heck they're doing. And until they prove me wrong by going higher significantly enough to trigger another flow sequence, well, I'll leave them to others to talk about it. Okay? I'd rather like to advise you to do this as well. You better like to trade your own strategies with your own decisions, well-crafted ones in which you have very limited chances to make personal assumptions all over the place. And just go with it. All right? That being said, see you guys next week. Have a good FOMC.